At what level is the tipping point you have in your head where things fall apart for Governor Bailey?
Well, to be honest, there's an awful lot of pressure on Governor Bailey already, certainly from Liz Truss, who looks as if she could be the next Prime Minister of the UK. But I think we could be heading down to 115, maybe 114 on cable, and that would add an awful lot of pressure.
I don't mean to interrupt, but if we go to 114, is that a trend and a controlled trend, or do things, to borrow a phrase from politics, unravel?
I think if we're at 115, 114, a lot of that actually really does depend on the dollar, and specifically on euro-dollar, because what we're seeing at the moment is if euro-dollar dips, and of course it's been dipping, it's very difficult for cable to hang on in there. It's been dragged lower too. So a lot of this is a dollar move, certainly over the last week. But that said, there is a lot of sterling weakness. The pound has really been suffering, I would say, for the last 4 or 5 years. Since the 2016 Brexit referendum, sterling has never really been able to recover. Investment has never really been able to recover. Investors are still quite skeptical, I think, of the post-Brexit UK economy, and the government that we've had hasn't really been able to convince investors to come back in. You've got to bear in mind that the UK's got a current account deficit, and if those overseas savers are looking in at the UK and they're not liking what they're seeing, well, sterling is likely to adjust lower, and I think that's the situation that the pound finds itself in. And without the growth, without the investment, I think sterling could remain, pretty weak for a while.
Jane, do rate hikes make a difference? Are you saying they don't?
I don't think they do. I mean, look, if you go back to May, we had, admittedly, an as expected interest rate hike then. It was a 25 back then in May. And sterling really dove. And the reason it dived lower was because the Bank of England at that point in its quarterly review downgraded the downgraded the growth number. And if we fast forward to August, the next quarterly review, this is the one where we had the governor saying we're going to have a 5-quarter recession. And again, sterling reacted badly because, if we think that a lot of this is about the lack of investment growth in the UK, investors need something to hang their hats on. They want to see improvements in productivity, improvements in growth, and that's not what they're seeing right now. And that's, I think, why sterling is really so weak.
Well, and the BOE obviously is in a tough spot in that regard, but the ECB is too. There is a question of whether they can do anything to support the euro. If we get a break of parity once again, where's the bottom?
Well, I think if we were to break parity, I think there's every reason that we could fall quite fast, maybe towards 95. I think there's some options below there which could trigger such a move. And I think you're right, really, to make some comparisons between the Bank of England and where the ECB could find itself perhaps in a few months' time. Because if we look at the situation in the Eurozone, it's all about energy. We know that. If we do have, say, blackouts in Germany's industry groups over the winter months, if we do have the market, panicking about what that would mean for growth or lack of growth in the Eurozone. But that wouldn't necessarily do anything to bring inflation down. So we could have a hawkish ECB in that sort of scenario, but that wouldn't be a scenario which would be beneficial for the euro. So again, it could be that the growth worry overtakes the outlook for the currency over and above the hawkishness of the central bank.
Well, and there's a question of causation here. Is it weakness of the euro or strength of the dollar more so? And on that point, where do you think the peak is on the DXY?
Well, I think we're going to remain strong at least for the next 6 months. And I think you're right. For instance, if we look at the G10 currency performance today, actually the euro is holding in relatively well, actually better than many of the other G10 peers. So this is about dollar strength right now. I mean, of course, there's euro weakness in there, and the energy story is really important. But this is about dollar strength. And to be honest, I think for a while, the dollar's got these two-pronged factors driving it. And the first is, of course, the Fed. And now the market's again thinking that the Fed could be higher for longer in terms of interest rates, that maybe it needs to keep interest rates higher next year in order to really get that inflation back in the box. But the other factor is, of course, safe haven. And don't forget, at the start of the week, we had a lot of poor Chinese data. Now that's really bad for emerging markets. It's really bad for world growth, and that is part of the attraction of the dollar, this safe haven flow. So I think both of those things together have been pushing the dollar higher, and I don't think the dollar's done yet.
Jane, with that in mind, what's the downside on a currency pair like cable? Now, once you take out the mid-July lows, what next?
You know, I do think 115, 114, you know, we could certainly see there, but it does depend on where euro dollar goes, because there's a bit more of an equal battle at the moment between the poor fundamentals in the sterling and the poor fundamentals in the euro. So I think the guide here will be euro dollar.